Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 18th of November, 2023, and this is the weekly technical analysis for the euro, the cable, and the Aussie dollar. And you'll see for across all these three majors and other pairs against the US dollar that there's a massive bullish breakout for all these pairs against the US dollar. So US dollar has definitely pulled back significantly, and that's all due to Tuesday's US CPI figure, which came out lower than expected and surprised everyone, and the markets was celebrating with that. So it attempted to continue and resume also on the Friday towards the end of the week, in between other news. And we'll take a look at what transpired for last week, apart from the CPI data, but that's the most significant one. And take a look ahead for this coming week and to see whether there'll be any follow through or whether there'll be any stumbling blocks to this continuation move for all these majors. All right. Well, right from early in the week on the Tuesday, the US CPI figure came out lower than expected. And even though it was just slightly lower than the forecast, but this already prompted the market to project that perhaps the Fed may have reached its end of its rate hike cycle, and hoping for an outlook for possible rate cuts for next year. So, but we'll see whether the Fed is satisfied with this, and whether the future monthly CPI figures will also show further slowdown and reduction. But for the meantime, this definitely crushed the US dollar in the short term. And the other majors gain against that, and was a slight pause for the pound, sterling pound, on the Wednesday, as the UK CPI figure was also lower than expected. And after a gain on Tuesday, it pulled back slightly on the Wednesday, but then resumed as US PPI figure supported the CPI with even significant lower than expected PPI figure here than forecasted. So that really helped to support the other majors. And US dollar suffered a bit as well on the Friday with US retail sales figure, although it was slightly higher than expected, but it was still negative. It's still negative growth, no growth there. UK jobs was also lower with higher claims. And then the Australian economy, they had better jobs added, so that supported the Australian dollar further as it gained against US dollar, of course. And on Friday, it was also slightly lower than expected UK retail sales, so that slowed down the bullish momentum for the sterling. Now, looking forward for this coming week, there's no major news. It's just all flash PMI figures. So especially on Friday with the US coming out with their manufacturing and services PMIs, but throughout the early part of the week, there could be a lot of volatility with major pairs trying to continue its bullish momentum, and it could consolidate, but we'll see when we analyze the charts. But no major news for this coming week, and only some increased volatility towards the end of the week. All right, so the main trigger was all due to the lower than expected CPI figure, which caused all the breakouts. Okay, so let's take a look at the analysis. Let's begin with the euro. After sitting on the daily 55 EMA and in the middle of the rising channel, it finally broke out higher from the 107, pushing towards almost 200 pips towards the 109. That was the breakout on the Tuesday with the lower than expected US CPI figure, and it broke out from the channel and the 62 pip retracement and blasted through the 108. Pause for a couple of days until Friday to resume its bullish momentum and had a very strong bullish close for the week above 109. So it's looking to attempt to target the 110 round figure. Let's take a look on the weekly time frame, and that's a very strong bullish candle there, and heading towards above this spike and heading towards the 110 and the weekly 200 EMA. So we'll see how much pullback there is for this week and whether it's going to continue its bullish momentum. All right. Now let's flip this around to show the retracement and potential extension. So it's going up towards to test the resistance zone here with this recent swing high. And there is resistance level here. And the only news is minor news for the Eurozone with the flash PMIs, and of course the US as well on Friday. But that could create some volatility. And we'll see if it's able to break out this week or whether it's just going to consolidate for this week until next week, the last week of the month, where it's going to try to break through higher. So for the moment, the significant resistance, major resistance is still going to be at 110. And the support now is going to be at this breakout of the channel trend line, just coming up to the 108. and a major support right below that at the daily 200 EMA, just at the 62 fib retracement. So there's an interim resistance here. This recent swing high. All right, so let's compare this with the US dollar index, the DXY, and we'll see if it's inversely correlated and US dollar should have broken down. Well, here's the US dollar index, and it does look like it's inversely correlated as well to the euro dollar. And that was the Tuesday's CPI data, which dragged the US dollar down below significant support and the daily 200 EMA. So that was the breakdown. And after a retest, pause for a couple of days before Friday, it resumed its weakness, bearish momentum here, and closed bearish. And that's the weekly candle here below the weekly 55 EMA. It's a very bearish move. And looks as if it's attempting to target the next round figure 103, and then the support swing low below 103 at the 102.50, 55 area. So we'll see if there's going to be a consolidation or whether it's just going to straight away resume and target lower figures. So the market could take advantage of lack of major news next week and attempt to just drag this down further. Now, major support now is going to be at this swing low, which we'll need to flip this around. And intermediate support at the 103. Resistance, major resistance is at 105 along with the daily 55 EMA. And an interim resistance at the breakdown of the lower channel trend line. So let's extend this and it's could be at the 62 fib retracement. It could align there. All right. Now we'll see whether this week it's going to retest the breakout area breakout zone and whether it's able to break down below last week's low and target the 103 and the swing low, and even further if its bearish momentum continues. All right. Let's see where this very bearish engulfing candle pushes the levels further. But the first test will be at this recent swing low. All right, so let's move back to the other pairs. Let's move on to the cable, where after finding support at the breakout area of the upper channel trend line, found support at the 21 fib, and Tuesday broke through the resistance of the daily 200 and the 50 fib and targeted the 125. So that's a over 200 pip move. Then on Wednesday, the following day, was the UK's turn for their CPI data, which also dipped lower than expected, and this caused the cable to also pull back lower against the US dollar, and then consolidated around the daily 200. It finally managed to bounce back up even with lower than expected UK retail sales on the Friday. So overall, the US dollar is still driving this pound sterling higher as US dollar weakened further. On a weekly time frame, see it engulfing over previous week, and let's see if it's going to continue after a pullback retest, whether it's going to continue higher, break out higher, or consolidate until next week, until the following week, until the last week of November, before it resumes. Okay, and let's move back to the time frame and move this into a major resistance area, and flip this flip around. So that's going to be at the 786 fib retracement. The interim is going to be at this 62 fib, just above the 125. Interim support is at the 38 with the daily 55 EMA. Then the major support at the 21 fib, just at the start of the move of the bullish bounce. And if we take a look at where this resistance was, it's from all the way back from support to resistance, and then support. Let's extend this out. Okay. So we'll have to watch this along with the US dollar price action, as with all the other major pairs as well, and to see whether it's going to resume its bullish momentum this coming week. Okay, let's move on to the Aussie dollar. And likewise, it looks similar to the cable. Finding support at the 21 fib. Let's flip this around first. And then breaking out towards the 65 resistance zone. Tempted to continue higher pullback on the Thursday and then resume the finding support at the 50 fib. So this is now an interim support zone. Major resistance is going to be at this round figure at 66. Major support now at 21 fib here. This has the select the cable. This could be slightly lower towards the daily 55, and to meet resistance between the 786 and the daily 200 EMA. So take this one out here. Okay, on the weekly time frame, slightly engulfing over previous week. So we'll see how much pullback there is, perhaps to the 50 fib, and targeting 76 and the 66 round figure. May or may not get to test the swing high. Okay. So again, no major news, so it's all following the US dollar price action. And there's an obvious target here. And then the 66 round figure, along with this breakdown from the previous channel. So that's where this swing high was or is. All right, so let's watch out for the US dollar price action this week, and it all depends on that. to drive these major pairs price action as well. All right, so do check out my other videos on spot gold and dollar yen. Have a safe week and a good trading week, and cheers for now.